Hello friends, welcome to my channel. So Wall Street has ended with one more volatile week, and the recent times the overall market has indeed turned very volatile, and the indices are not moving higher, neither moving lower. So this is the situation which we have right now, and something very interesting are happening, because I have specifically said one thing, that we are in a transition phase where everything will move higher, everything will move lower. In normal times, those indicators are going, they are opposite to one another, like crude, like dollar index, like equity market, like bond yields. Now, this is the time when everything either started moving higher or lower. So they are all entangled with one another. So this is the kind of phase we are into, and if you want to deal with this situation, either stay out. I don't know staying out from the market is a good idea or not, or just leave the market. If you are a long term investor, those who are actually long term investors, and they are been in the market, they just take this time as a holiday time for them, because there is nothing to do until and unless they have some specific ideas to work on. They are not going to look at daily market activities, which stock is going up or down. Now there are some very interesting things which we are going to look at, as far as the updates which has impacted the market last week and probably will impact the market. And obviously we are going to analyze all the charts which are important for you for the upcoming week. So let us see what lies ahead. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now the first news, Nvidia's AI driven stock surge pushed earnings multiple 3 times higher than Tesla's. Now, whether you can call it as a euphoria or something else, or whether it is driven by good fundamentals. So every stock has its own time. Now it is Nvidia's time, and even if it moves lower, there are enough buyers to grab this stock, unless everybody beyond a certain time will fed up and started leaving the stock. That's a different scenario, that's a different zone. Right now it is in a bull trend, and if you don't drive or don't go along with this stock, obviously you will stay out. Or if you want to go with this stock, and if you, let's say, started purchasing this stock and then the stock not started performing, then it's fine. If it does not perform, then you will scratch your head. So in both the situation, things will be different. So you need to consider all these things before taking any trade. Let's see what lies ahead or what else we have. So there are some soothing impact between US China agreed to double weekly flights between countries, and I hope there is not something which is very blunderous coming in the upcoming months or years. Because one thing is, China is not a democracy. They don't bother about people, and if things go, they are very money minded people. Everybody is money minded. There are no free lunches, but the backside, the hidden truth of China is actually hidden. Nobody, even if they say that yes they are fine, they will do that, but at the end of the day something will change, and this thing happened again and again and again. So this is like a specific individual's nature. You know your friend, you know your enemy, you know your family. And if let's say if somebody is talking for your friend, and if that particular person tell you that this friend, naming that person, so there are certain images, because you have some behaviors which you have observed of that particular person. So you know that this is the person, this is how he behaves, this is how she behaves, this is how he or she talks or reacts. So this is what we have as far as China is concerned. Time and time again, which each and every country, somewhere down the line, things will not go right. This is the history, and you cannot change the history. Everybody knows the Moore's law. If you do not know, just Google it. You will see what it is saying. And I mean, this is a very simple line. The Moore's law is a very simple line, but it is a very effective line. Okay, so let's see what else we have. Dangerous point for investors. Strategist warns of overconfidence about AI. I mean, I don't give much credence about these kind of lines, because we can see, you go on history in the last 100 years, you will see this is dangerous because people started pumping in when cryptocurrencies came. Everybody jumps in. So these are moving in cycles. Those who know how to ride the trend and how to get off, at or just the train, just the station or your destination is about to arrive, if they know how to ride the trend, they made money. If they do not, most of the people fall in that category. Obviously, you will made up making losses, or you will gain a very little less. So this is something which is happening time and time again. So I mean, if you know how to ride a trend, and if you know how to find a trend, you can do that. And if you don't know, then stay out of it. Obviously, stock market or money market is a risky game. There is a degree of risk, whether high or low, but there is a degree of risk, and that's what you need to know about. And when you are making money, obviously, you don't blame anybody. If you started losing money, apart from yourself, you will blaming each and everybody. So these are also some true facts. Anyways, what else we have? US sanctions 4 of the Russian elites. I mean, this is going on, and this is the reason. I mean, geopolitical crisis. This is not geopolitics, because geopolitics plus geoeconomic war. Once this tension ends, you will see a deep fall, a big crash in inflation, and things will normalize. And you will see that the central banks will started cutting rates. But the finale is not yet happened. That's what I have understood in the last 2 years. The finale is yet to happen, because people are not satisfied with that. Until and unless, I mean, it has stretched a lot. This is more than normal. It has stretched a lot. People, sensible people across the world, knows that Ukraine and Russia both are the big exporters of very essential commodities, and if both are on the rampant, and if it continues to go on, obviously it will have a very big impact, and the entire world is suffering with energy crisis, with high commodity prices, with higher inflation. And this one thing, if one thing ends and things normalize as it was 2 or 3 years back, you will see a big change in the geoeconomics as well. God knows when will the finale happen, but that's going to be very bad. Okay, if this is not ending the way we are expecting in a normal thing, it will not end until and unless somebody who strikes first and who strikes last, God knows. And I just wish and pray for everybody's wellness. So I don't know, but this is the only thing which I actually fear about as far as market. And this goes beyond 2 countries. This is now impacting the lives of people across the globe. Apart from that, let's see what else we have. IEF flag risks for higher oil prices, cut 2024 demand view. So I mean, this is a controversial statement. The demand view is decreasing, but there are higher oil prices. What does it mean? It means that they will keep the price of oil at check, so that there is enough demand, and there is enough money to be made. And as I told you, once this tussle between Ukraine and Russia sorted out, everything, you will see again a big crash in the oil prices. That's also a possibility. So God knows when will that happen. Apart from that, what else we have? So I mean, those who are watching the market, they have seen the downgrade of 10 US banks and all those things, but still the market has not performed in a very berserk manner. And stock or the overall indices actually fallen a lot, but it is not out of the woods. The downtrend continues, but it is not like it was a big crash or mayhem in the market. So it is moving within a range, comfortably within a range right now. So what do we have in front of us as far as the last Friday close is concerned? Dow Jones up by 105 points, NASDAQ down by 0.5% or 76 point. S&P was completely flat, gold at 1945, oil at 83. So as I told you, oil started moving higher, and I've talked about oil for the last 1 month because it was a clear-cut uptrend, and at 83, 84, it is actually on the verge of a breakout, or it is trading at its resistance. We will see what will happen. Now US 10-year yield trading at 4.15, so longer end of the yield started rising higher, and this is not a good sign. This shift or this tilt on the longer side of the bond yield curve is giving you an indication that now the recession is very, very near. Okay, this is now going beyond the hands of central bank. I'm sorry to say nobody would have said that, but this is a situation from here on. Something will crack going forward. So we are in a situation, and if it does not happen, I will be very happy. But the indications are from this position when the short end or the short term yields are extremely higher, the long term yields are lower. But now the long term yields are also started moving higher. So this is not at all a good scenario, because this will keep on pushing the money out of the stock market, and it will flow into the funds, in bonds, yields, I mean fixed deposits, whatever you can call it as your conventional way of making money. So things are going on that side, as you can clearly see. We will check with the yield curve as well. I'll show you the yield curve as well. And then we have a US dollar index, and actually it has made a breakout. I will show you the chart as well. Whether the breakout will sustain or not, that's highly questionable, but yes, there is a breakout as of now. So let's start analyzing the charts. Number one, let's go and see the bond yield or the yield curve. Okay, so what does it saying? Because so you can clearly see. Now let me show you what is happening. So this is what is happening. Now the chart, you can clearly see an inverted yield curve. Okay, and this is the higher end of the range, and if I move this thing higher, you will see a bend, a clear cut bend, because short term yield swings beyond 5%. But if I see this chart right now, what we can see here is an upswing. So the short end started moving higher, the long end also started moving higher. You can clearly see. So this is you can clearly see. Now this is not at all a good indication, because when everything is moving higher, I mean this is a logical thing. Let's say you have $1 billion, and I mean the 1 month yield, you can clearly see this is the 1 month treasury yield at 5.3%. Then why should I invest in stock market? If I can make $500,000, I mean this is a risk-free investment, and in a matter of a month, why should I invest in stock market? Or let's say if I have $1 million, okay, $1 million, so I can make $500,000, and for $1 billion I can make $5 million. So why should I why shouldn't I invest in treasuries? Why should I go to stock market? So this is a very common thinking. Okay, so I am a layman. If I can think this way, why do you think that the people with big money, they can take risky bets? Because for them the volume is so big that even with a small percentage change they can make a lot of money. Okay, so don't think the way you are thinking. They will think in a completely different way. I'm just giving you a sense, but yes, this is not at all indicating something good. Now let's go to the chart. So this is the dollar index chart, and I've been talking about it because it's been correcting, consolidating, and now there is a breakout. There is a breakout, and this is not at all a good scenario. If it continues to sustain above, if dollar index continues to sustain above 102.6, the next move will happen, or the next target for dollar index will be in between 104.5 and 104.7. Okay, so this is the range. Now the dollar index will retest, and this is not at all a good sign, number one, for the stock market. Number two, let's go and check the WTI crude futures. And if I go and check the WTI crude futures, yeah, this is what one can see. This is the daily chart. This is the daily chart. And if I do look at WTI crude futures, it is trading at the resistance zone. Now it will depends upon the move of WTI crude futures to trade either below $82 or sustains above $84. If it started trading and sustaining above $84, the next target will be $93. So I mean a $10 jump in a crude. And obviously if it falls below $82, then you will see a soothing impact, or in the near term the crude may move lower. So I mean, this is also very positive for as of now. If you're looking at the WTI crude futures, it is holding above 83, which means there is a potential of breakout. And if once the breakout happen, or once WTI crude started sustaining above $84, it will move to 93. Very simple. Now the next chart will be Dow Jones, because Dow Jones closed in green, and this is what. And Dow Jones is not is actually not a very strong barometer for the market, because as an individual, the stocks which you have invested in are basically those stocks which are NASDAQ, majorly NASDAQ stocks. And Dow Jones, the stocks which are listed in Dow Jones, they are slow moving old economy stocks, and they perform better when the inflation moves higher, because that's the time when they started making money big time. Now if you are looking at DJI, and if Dow Jones continues to sustain above 34,641 and 34,760, it will move towards the upper end of the range. Okay, and there is a possibility that it will retest the recent highs of 36,590 and 36,970. So this is the next target. So this is the broad range. It may correct, consolidate, but if the range is intact, it will definitely move towards the upper end of the range. This is number one. Now let's talk about NASDAQ, because NASDAQ is where the recent correction, yes, you can clearly see it is in a correction mode. So the support for NASDAQ is going to be the breakout level above which the breakout happens. So there are some more to go as far as NASDAQ is concerned, and the levels which we need to focus on is this particular level. Okay, so this is the level which we need to focus on, above which the range breakout happens. So if NASDAQ takes support at or near 13,220, then fine, but if it falls below that, you will see further correction. So it is in a correction, but if it continues to sustain above, if NASDAQ continues to sustain above 13,220, then it is fine, which means the uptrend is intact. Below 13,200, then you will see a big problem. Talking about S&P 500, the balanced one, obviously it is balanced, have an impact of both NASDAQ and Dow Jones, but bigger impact of NASDAQ, because the companies which are listed in NASDAQ, but it is in a big uptrend. You can clearly see the chart. But the kind of price action we have right now, and if NASDAQ continues to trade lower, it will definitely move lower. S&P 500 has no way out and it will move lower. So the support for S&P 500 will be in between 4,200 and 4,340. This is something which we are going to look at. So you may find individual opportunities in stocks, but as far index is concerned, just leave it, because it's going to be if it does not fall very quickly, it's going to be a slow grind, and you can't make money until and unless you are a pro. You can't make money from this market, and most specifically from the indices. So there are corrections which is clearly visible. Maybe Dow Jones will not fall much, or it will consolidate, or it will rather move higher. The correction is coming from the NASDAQ, and S&P 500 meanwhile will also correct further. But the problem is, and one more thing, yeah, this is the level. This is the biggest level, so you will find support at 4,333 for S&P 500. If it continues to sustain above 4,333, the uptrend will be intact for S&P 500, right? So the thing is, the problem area for Wall Street, not only for Wall Street but across the globe, are two things, and they are the crude and the dollar index, and both started moving higher. Is not at all a good sign for the market, and for the time being, there is no point, or there is this is not the time to do some funny stuffs, because you will not make money, and rather, if you are thinking about short term, you will end up making losses. So leave the way the market is performing, leave it. Okay, if you have some individual or specific stock ideas, focus on that. So this is the end of the video. Thanks for watching.